So in the overnight session, we saw a breakdown continuation move into the 20-half support, as well as the naked VPOC at 28.18, where responsive buyers stepped in and pushed the market to a fresh overnight high. Now, heading into the open, our intermediate term bias continues to be bearish, and our short-term bias is going to be neutral bearish, and the sell side can maintain short-term control below the 64 to 68 initial resistance zone. So as long as sellers are holding ES below that area, or even below 70 quarter to 71.75, there is still potential for the sell side to maintain control, and then on the downside we can test the pre-market support at 39.5 to 43, as well as yesterday's RTH low at 37.5, followed by the initial support zone at 32.75 to 35.75, where buyers can be active, and we would need to see continued broad market weakness and sustained downside momentum in order for the market to continue selling off below the initial support zone. In the event that we are seeing that bearishness in real time and we get a break below initial support, the next area where buyers can be active is 20.5 to 23.5, as well as 17.75 to 18, which marks the overnight low. But heading into today, we need to be a little bit more flexible with our intraday bias as compared to yesterday, because now the market has already hit the important downside objective and downside target of 28.20.5. So in the short term, the downside may be done. The fact that buyers stepped in such an aggressive way and pushed the market to a fresh overnight high signals a certain level of short-term strength. So we're not going to be as aggressive on the short side as we were yesterday, because now the market has already made a big downside move. It got oversold into that 20-half support. But the bigger idea is that as long as sellers can hold ES below 64 to 68, then they can maintain that short-term control from yesterday, and we can balance at lower prices